Good evening and welcome to another episode of Market Money. I'm Jermaine, co-founder at L.E.A.R.N Invest. And today we're going to be looking at Kingston Wharves, a company that was recommended by a member of our community. You know who you are, I won't call your name, but we were having a conversation about Kingston Wharves last week. And this member of our community thought it'd be interesting to have a look. And so I've been researching since last week. I just watched the video from their annual general meeting today. So if it's a company that you're interested in after watching this video, check their YouTube channel. They actually have their last few AGMs there. Quite an interesting company, one that I'm certainly going to be doing more research into even after this episode, because I think there's a lot that I don't want to understand about the company. I've reached out to their CEO, Mark Williams, hoping to get an interview. That has not been confirmed as yet, but I'm hoping that we'll be able to speak to him soon. But they recently conducted their AGM, and as I said, if you're interested, be sure to check that out. All right, so let me go through, just get up my usual disclaimer here. Well, before I do that, this episode, we are going to be talking about Kingston Wharves, as I said. And there's actually some interesting developments in the market that I want to cover near the end. Started trading again today. I think that's worth spending some time talking about. Since we did our last episode, I think Equity Line and Edifocal has been suspended. So I'm going to talk about that a little bit. And so I'm hoping to do the first half of the episode on Kingston Wharves and the rest for just some general market updates that I think are interesting or what you, our viewers, would want me to talk about. So let me know in the comments now which companies you may want me to look at during the market update segment. I see you, Tavares and Last Drop. Thanks for joining me. All right. So let's start. Well, the usual disclaimer, of course, this is for education purposes only, and you have to be sure to speak to a licensed financial advisor before making any investment decision. All right, so we're talking about Kingston Wharves today. The stock closed today at $24. That's down 85 cents or 3.41%. The stock has been as high as, I believe, $78, $79. So this is a ways down from its all-time high. And so that's worth noting. Of course, we know that a lot of stocks are down in terms of where their 2019 or 2020 prices were. But it's worth noting that Kingston Wharves was really one of those stocks that were seen as were higher in price a few years ago. And so the primary focus of the company is the operation of public wharves, stevedoring logistics services, and security services. The wharfage rates and specified penal charges are billed to customers by the company and are subject to the regulation of the Port Authority of Jamaica. And of course, the company is registered at 195 2nd Street, Newport West. And they've actually made a recent investment in a new property, which we'll talk about a little bit later, right? In terms of the highlights, their revenues for Q1. So we're going to be looking at their Q1 results and then a little bit from their highlights for their annual report. So in terms of Q1, their revenues for the quarter are up 12% to 2.6 billion. And their operating expenses up 4% to 424 million. Profit before taxes up 4% and net profits up 8%. Quite considerable. Certainly, well, I didn't say this, of course, but this is a main market company, and its earnings per share up to $50.06, up from about $47. And their stock price is down 10% year to date. As I said, it's been quite a ways down. It'll be down about 68% within the last couple of years. In terms of their balance sheet and cash flow, so assets are up 36% to 58 billion. Equity is up 28%. Liabilities up actually 82% from 6 billion to about 11 billion. Of course, we look at the balance sheet a little bit further. But of course, you would understand, well, we'll get there soon. In terms of cash flow from operations, negative 30 million, down from 530 million for the same period last year. So we look at as to why that is a little bit later. And cash flow from investing activities, they've spent more considerably again with new property that was mentioned. They would be investing in that, and cash flow from financing activities up 138% to 765 million. Of course, this is where companies either pay their dividends and so on. So that's normal, and they've been paying a consistent dividend. So we look at those numbers a little bit more later. In terms of today's range, as at June 19th, the date of this original video, stock traded between $24.05 and $26. 52-week range up to $35. So you're seeing it's down $11 or almost 30% there within the last 12 weeks. Market cap stands at 34 billion. Shares outstanding is 1.4 billion. So one of the things that was mentioned or asked at their AGM was, how they're planning. There was an announcement, and I'll try to find that article, that they're planning to make an investment of up to US 100 million over the next few years. So of course, the question then comes, how are they going to finance that growth, right? So the CEO mentioned that they're going to be looking at their options, which means they're not ready to announce it. It's always interesting when companies say that, because I think usually if they announce it, they have some idea as to what they would want to choose. Of course, it makes sense that they want to hold off until they absolutely have to share that information. So at this point, we're not sure how they're going to raise that. 100 million US is a considerable amount of money. So I imagine they may be using a combination of options. In terms of dividends, everybody in our community knows I'm going to be looking at this. So they paid a dividend totaling 68 cents last year. And of course, as the price has gone down, the dividend yield has increased. But of course, you still see that this looks like it's maybe about 2%, if I'm not mistaken. I'd have to do the calculation, but my estimate, $24 stock, 60 cents, maybe about 2 to 2.5% yield for last year. I may be wrong, but it's somewhere there, maybe 1 to 2%. And then dividend for this year, they've declared one, hasn't been paid yet. It's going to be paid on the 16th of August later this year for 26 cents. So we'll see if another dividend is announced within this financial year, because when you look at the history, I think I can go to that now. Let me see. If I go to their instrument summary page on the Jamaica Stock Exchange, we'll get to the stock price in a bit, but just straight to dividends for now. You see a trend here. Let me zoom in just a little bit more. You see a trend here of 2 dividend announcements per year, right? So what we saw for 2023, 22, 21, and 20. So it's safe to assume that they're going to pay another dividend based on their track record. And usually it seems to be just under 70 cents, at least for the last 2 years, for 23 and 22, right? So 26 cents now, maybe around 40 cents, 42 cents a little bit later in this year, right? We'll get to the financials a little bit. So I said we would talk about the stock price. We did talk about how it's been for the last year. So where you see CA here, those are the dividend announcements or corporate actions rather. And a year ago this time, it was actually at $28, but it saw growth earlier this year up to about $35, and then found its way back to under $25, right? So I'd have to maybe check to see what might have been happening around this time. We're not going to do that now, but it'd be interesting to see what might have been happening around March, April, to see what might have maybe led to this increase, right? Let's stay there for now. So let's look at the Q1 report. Let me find that. All right, so this is our Q1 for 2024. So for the quarter ending March 31st. So we spoke about the highlights already, the growth over Philbert. I'll check. Philbert is asking if they have any preference shares or the benches on offer. I'd have to check. Never saw it in my research, but I'll try to find out. All right. So net profits increased by 5% or 32 million relative to the prior year. And earnings per share, as we mentioned, was 50 cents. I think I might have said $50. I apologize for that. 50 cents compared to 47 cents the prior year, right? So the business is really split in two sides, right? They have the terminal operations, and then you have the logistics services. All right, so it says here that that's the terminal operation side of the business generated revenue of 1.8 billion for the 3 months, and revenues were flat compared to the same period last year, and then their operating profits for this side of the business would have decreased by 12%, and the reduction here is primarily attributable to depreciation charges and expenses in connection with the commissioning of their infrastructure projects, right? So they're trying to increase the capacity of the terminal, and so they've had to make investments there, right? And it says here that the terminal operations is the largest segment of the group, contributing over 60%. I believe at their AGM, they said it was 65%. And so, of course, the performance here, it says, is directly affected by the level of regional and domestic economic activity. So that's something to note, which, of course, makes sense. Although the underlying economic conditions have been varied, the diverse range of services and categories of cargo handled by their multipurpose terminal have allowed for relative stability in their results, which is kind of what you've been seeing. Then you have the logistics services, generating revenues of 990 million for the 3 months, an increase of 33%. So at their AGM, they mentioned that they would love to see this side of the business grow to maybe a point where they're 50-50 from both sides. So this has been, the logistics services have been trending in that direction, and it seems to be where they're focusing more of their attention, or at least trying to balance them out. All right, so this growth was driven by increased revenues from specialized logistics and warehousing operations involving full container load cargo, motor vehicle handling services, and port ancillary services. The motor vehicle handling services, I think it's an area that they mentioned at their AGM that they're very interested in increasing the capacity for. So I think their new location, I believe they mentioned a multi-level storage facility for the motor vehicles specifically. And then, of course, it says here which all of these 3 areas which benefited from capital investments and system improvements made to enhance the functionality of their facilities and the competitiveness and efficiency. All right, so let's look at the outlook. So it says here that they derive significant benefits from their diverse offerings as a multi-user, multi-purpose Caribbean gateway port and logistics service provider. So honestly, I know this is a company that maybe the average investor may not fully understand what they do or have an appreciation for what they do, but you're seeing the level of revenues for this company. And so I think it's important as you try to maybe diversify your exposure as an investor to at least understand the companies that are there. And that's actually what we're trying to do here by not talking about the same companies that maybe everybody else is talking about. But I think it's a good time, especially as to where we are to be looking at companies that maybe are in, industries that may be doing well in these conditions. So when things do improve, you may have opportunities. Not saying that this is the case here. I'm just giving you the thought process. All right. So that said, challenges in global logistics business arising from regulatory changes, global conflict, and the level and consistency of trade flows will affect their results. So it says for Q1, they would have seen the impact of drought conditions on the volume of trade passing through the Panama Canal, on trade routes from Asia to the wider Caribbean. So they're saying that would have had an impact on them for Q1. And then the impact of relatively high interest rates on the construction sector. And of course, that would impact their finance costs and things like that. So despite those challenges, they delivered what they considered to be satisfactory results. So their revenues increased, and I believe their profits increased as well. So it says here, berth 7, one of their 9 deep water berths, and we'll look at that chart next. They do have a chart where they go through the different aspects of the company. So I'll go through that in a second. This is what I have here. Has been completely renovated as a modern facility with improved draft and successfully reintegrated into their operations, right? So what they're seeking to do is expand the space that they have to be able to store cargo and provide other services. So it says this 30 million US infrastructure improvement allows them to handle essentially larger vessels, and the development improves their transshipment capabilities and sets the stage for future development. So we'll look at that in a second. And then, of course, final piece that I want to talk about was here. So it speaks to their warehouse, 130,000 square foot warehouse that they're seeking to fully integrate at Ashenheim Road. It's set to come on stream this year. And of course, that they've mentioned that it's fully booked out already. So of course, once it's launched, you can expect to see that impact in terms of revenues, I imagine. So they're focused on maximizing their offerings to local and international freight consolidators, freight forwarders, and manufacturers and distributors. So another thing that was mentioned here is, I believe, at their AGM, which I do recommend that you watch, by the way, they mentioned wanting to look on the other side of the island for an opportunity to create, pretty much replicate what they have in Kingston on the western side of the island. They haven't given any specifics as it, of course, but that's something to look for. All right, so I'm only going to look at the P&L for Q1, and then we'll look at the 10-year highlights and then the business highlights, and that should wrap up our review. All right. So we have here Q1's revenue, 2.5 billion, up from 2.2. We mentioned that was the 12% increase. Admin expenses grew here by about 14 million. And I mean, we've seen where this is just something that for companies, especially coming out of, I think maybe the increases for government in terms of compensation, we're seeing more and more companies that we're looking at, their admin expenses increasing, whether it be Q1 being, maybe they've paid, bonus and salaries coming out of December, that's maybe a one-off thing, or just in general, they may be increasing salaries for inflation. That's my speculation here. Nothing has been confirmed there, but we're seeing almost every company that we look at, their admin expenses increasing coming into Q1 of this year. So it's just something that I've noticed. Profit before taxation, 838 million, up from 807. And net profit up about 50 million. So it's like about 55 million. So that's certainly an improvement there. And we mentioned, of course, their earnings per share. So this is why I thought it was $50, by the way, based on how it was, what it was before. So I thought it was $50, which, of course, I thought would have been high, but it's since, of course, right? So Limitless Podcast is asking, what do you think will take to get them back to the high of 80s? So I do think that, well, let me stick up in there and we'll talk about it after the review, right? So we mentioned that their overall assets would have improved. So we see here 58 million or 58 billion rather, up from 43. So let's look at the notable line items here. Property, plant, and equipment, which makes sense. They're investing in a new location, and the expansion of their I want to say port. Hopefully that's the right word, of the space that they have to store items. So those are the two main drivers, I think, of that increase in assets. We see where retained earnings increased here, and capital reserves have increased as well. So their equity has gone up to 47 million. And then, of course, we have liabilities, I mentioned, would have increased as well. So borrowings you're seeing here increased by 4.3 billion. And I imagine that would have been maybe financing for the new location. And we're also seeing trade and other payables increase by about 300 million. And so, yeah, so borrowings would be the main driver for the increase of liabilities. And I'm not sure if those details are in this report. I didn't check, but I'm imagining that maybe for the location that they're rolling out. All right, so we mentioned the decrease in terms of cash flow from operations here. So we're seeing negative 30 million. We're seeing increase in trade and other receivables here. And we're seeing this in terms of trade and other payables, right? So that's, I think, the main factor here. In terms of property, plant, and equipment, this one actually improved in terms of 1.5 billion down to 685 million, but we still see 849 million in terms of investment in PPE, which again, that's just what companies do to improve their capacity. And we mentioned dividend payment last year, and then this is loans repaid, right? So that would have led to their cash flow from financing, right? So I'm just gonna see if they mentioned. Oh, cool! I never saw this. Right, they had a breakdown of revenue per sector. I don't think we're gonna go through that now, though, but that's certainly good to see. I'm just gonna do a quick scroll. I apologize for this, to see if they have the loans listed here. That's top 10. We're not going to go through that. Okay. All right. So that's fine. Let's look at, so on their website, which I think was very cool to see. Let me go here on their website. They have quite a bit of information or collation of a lot of information about the company. So their investor relations page, you can see all the reports. They did a breakout of their 10-year statistics here and business highlights, which I think is very useful. I think more companies should really adopt that. But let me just add some more context to this part first, in terms of they have their Who Are We page that shows the history of the company and then where they are today. And this goes down into more detail as to what they offer. I thought this was pretty cool to see. So if you do want to understand more of what they offer, I'd say, go through this, because this is very helpful to understand. I was saying to my co-founder that maybe she would understand a lot of these things a lot better than I would, but also that's why I'd want to interview their CEO. I'm not going to go through that now, though, but I thought this was very interesting in terms of a good overview in terms of what they do, right? So this is their business highlights summary. So this gives you a pretty good idea of their different services that they offer. All right, so port terminal and logistics division provide full range cargo handling and logistics services, 24 hours a day, 7 days a week. And they're showing you the different aspects here. So that's pretty cool to see. they're showing you the different countries to which they provide services to, or that goods may pass through their ports. And then this of course is listing some of their achievements. I'm going through here. And so I wanted to look at this here, right? So multi-purpose, multi-user terminal. So it's located on Port of Kingston, and as it mentions before, 7 days a week, 24 hours a day, right? So what it does here is lists the different areas and shows you what it is. So I think this is a very nice breakdown, one that will give you an idea as to what they have. So you see the different berths here. So berth 1, berth 2, berth 3. So they're continuously expanding how much space they have. So all this area in blue will be places where they're able to store cargo, and the different sections here. So you have the on-dock transshipment car park, you have the off-dock car park, the logistics center, the integrated logistics warehouses, and so on. So it's quite a large footprint here. And this is what they're also mentioning here, the Ashenham Road location. So they're showing you that they have quite a bit of capacity, and they're looking to renovate, I believe, berth 7. And then that's one that they've been working on, right? In terms of highlights, we went through this already, but revenue growth from 2020 onwards look to be about 2 billion increase in revenues here. Operating profit was at 3.9 billion for 2023. It's highest in the last 5 years. And then of course they're showing here total tonnage handled. It's actually down from the previous year. So that may be a factor of, I guess, the different challenges in terms of what we're seeing. And of course, stock price at the end of the year was $27, and we spoke about that before, right? Shareholders' equity have been consistently increasing. Its highest now at 47 billion, and their market cap at the end of the year was 38 billion, right? So this is just good information to go through. And last year would have been their highest dividend paid, I believe, in their history, right? Close to $1 billion. Right, and then they have in this document their 10-year statistics. So I brought this over to Excel. Just a couple of things here. I'm sorry if this is a lot for you to go through. I won't spend time on all of it. Just, I believe, a couple of areas. So all I did really was copied this 10-year document, just import it into Excel, right? So that's all I did. So you can trust that all the information is there, because I just pretty much did an import, right? So this one just shows some highlights, but it has the key ratios. So ratios like their debt to equity, which stands now at 15.57%. It's highest in the last 5 years. They have their return on equity, which is at 6.76% at the end of last year. Their current ratio here, 3.75 to 1. And they have here, of course, the pricing, the stock price information. So in 2018, their stock price ended the year at $77. And what we see now, it's down to 27. It did show that the year before, so from 2017 to 2018, it would have grown over 100%. But since then, of course, 2019, it was down, 2020, and so on. So though the revenues, and if you look at, let's look at, I think, net profit for that time, right? So net profit 5 years ago, when their stock price was close to $80, was about 1.9 billion. They have 3.16 billion in profits now, right? So it's not like they would have issued any additional shares or anything like that. So in terms of their EPS performance, which we'll get to, So the company has been performing, you would say. Slight dip last year, but they're back to where they were the year before here. So in terms of, I think Limitless asked a question, what do I think will bring them back to the highs of the 80s? Well, certainly we're seeing their performance in terms of profitability has not decreased, right? So whereas some companies were seeing that decrease, they didn't see a decrease for last year. And their dividends paid has been increasing over the last 5 years. And I think the final thing I wanted to look at is their price to earnings have been going down, of course, because the price has been going down and the profits have been going up, right? So yeah, if anybody is interested in getting this Excel sheet, because I'm just gonna probably do some charts and so on, you can just send me a message or just message me on Telegram and I'll send it to you. All right, so I think that's it in terms of our review. We've gone through everything. I'd certainly recommend that you watch the AGM. It was very interesting to see what their plans are, how much they've grown. I'm quite impressed with the revenues and profitability. Interested in this new development that they're doing on Ashenheim Road. I'm interested in their 5-year plan in terms of that investment that they're going to be making of 100 million US. And so I think at least all signs are pointing that there's going to be more growth for them. I'm interested to see how they're going to finance the growth. Did I look at, let me do a quick check for something here. Did I look at how much cash they have on their balance sheet? So cash is 863 million, right? So there's no way they would have enough cash to finance their growth without taking out either debt or issuing more shares. So we'll see what they do there. So let me see the questions you have now. Yeah, so I was saying Limitless that they have not dropped off in any way in terms of performance. So I would say what would have led to maybe the lower share price is probably just a function of the overall performance of the market and not in them per se. I'd probably try to check to see if maybe like the top 10 has shifted over the last few years. I'm not sure, but it's their performance has not decreased. So I would say it's more market than them. How much square footage they have prior to this deal? Let me see if they have that in the highlights. I didn't see total square footage in terms of space. So on the business highlights sheet here, you have the different square footage here. I guess you could add all of that up, but I didn't do that check, right? Yeah, I didn't do that check, so I'm not sure. What do I think is the true value? I mean, first I'd have to think about who to compare it to. But as we see, their PE has been, let me say, the lowest it's been in 9 years, right? So the last time their PE was 12 was in 2015, right? So certainly the stock has traded at a high. When they were at $78, their PE was 56, right? So their PE is 12 now. So certainly you can reasonably argue that they're undervalued, but usually you want to say undervalued compared to something. And I'm not sure who to compare them to on our market. But certainly there's precedent for the stock trading at a higher PE. And so I think there are some opportunities there. What would account for the reduced tax bill given that the revenue before tax increased? Let me have a look at that. I'm assuming you're talking for Q1, Kevoy. So let me check. Taxation decreased. I'm not sure. Yeah, it decreased, it looks like by about 25 million. I'm not sure. We'd probably have to check. Let me check if there's, well, I know there seems like their taxation recoverable on the balance sheet increased. I'm certainly not the tax expert here, but I see taxation recoverable increased here, and this seemed to increase by about 40 million. So I'm not sure if that has any relation to them being able to pay less. I'm not sure. I couldn't tell you. All right. But they are a main market company, so they don't have the benefits of junior market companies where they're paying less in terms of taxes. So I don't know if it's a credit or a tax you're able to recover. Wouldn't be able to tell you. All right, so Philbert was asking, do they have any preference shares? Let me check their annual report. I'm wondering if it would be there. So that's the last thing that I'll check. And then, as I said, I want to talk about iCreate, and I want to talk about some other things happening, right? So I want to hear from you guys. What was your thoughts on the fact that, well, what's your thoughts on iCreate at this time? They would have, I guess, met the requirements for the JSC and have been able to resume trading. So I want to hear what you think. I'm going to look at their most recent report very quickly and see annual report for Kingston Wharves. So I'm going to check to see, Philbert, about the preference share that you mentioned. So let me just do a search in their report. Preference shares. So just give me a moment there. Kevoy, the last time we reviewed PBS was when they were doing their preference share a few years ago. So I haven't reviewed them since about 2021. So I see here that, where is this? Pension benefits, corporate bonds, repurchase agreements. So preference share is only mentioned once, and it seems to be something that is a part of their pension plan. So I'd say no, Philbert, but I'll try to confirm. Hopefully you're in our Telegram group. I'll ask David Rose, see if he can give me any insight there. But certainly if they have preference shares, it's not listed on the JSE, and I think we'd see that there. I don't recall seeing anything for them. And let me see if I can find if they have anything else out. So 1 second, guys, I'm just searching for something for Philbert. So I'm just looking at, well, I should probably share my screen so you can see what I'm looking at here. Apologies for that. So I'm looking at just to see if there's anything outside of the loans that they may have that were mentioned here. So Philbert, I think that's a no, I would say, to your question. So I'm not seeing anything here. It seems to be mostly loans from banks, local banks. All right, so okay. So that's what I'd say. All right. All right, so let's have a quick look at iCreate. So for those who may not be aware, there was 3 stocks up to, let's say, 2 days ago that were suspended for various reasons. That was iCreate, which has been suspended for a while. Then there was L.E.A.R.N, a company that I don't think we've ever looked at here. And then there was Edifocal, right? So we're still waiting for an update on Edifocal and L.E.A.R.N, but iCreate would have resumed trading. And so let's see, let's find that page. Let's first see the notice, if the notice made any update about why. Let me see if I can find out why they were suspended. And because I really don't remember, it's been a while. Why is this not moving? Okay, page 3. Okay, so this was the suspension notice on January 18th. It says, wishes to advise the public that in keeping with the provisions of the JSE Junior Market Rule 505 ongoing requirements, Section 14, delisting or suspension, it has taken the decision to immediately suspend trading in iCreate shares due to its failure to comply with the requirements of the JSE Junior Market Rule, Appendix 4, Admission Agreement, paragraphs 2 and 4, right? So it will remain in force until they would have responded to the satisfaction, which was an interesting phrasing, I think, of the JSE on all matters concerning its compliance. It's because this, when I remember when I first saw this, it sounded like it was more of a communication issue. Now, I'm not sure. I haven't spoken to the JSE or iCreate, and anyone from the iCreate team, but I thought that wording was interesting, right? So that would have been earlier this year. And let's see, page 2. So all of that, there were some further updates, I believe, change in company secretary, change in mentor. It's interesting that we saw some trading in shares here. Well, I think that this was a revision. So I think the reports came out for their Q1 here. Yeah. Oh, okay. Did the report come out or did it not come out? Hold on. I think I saw a report, right? Let me check here. So they don't have a report out? Okay, there we go. Q1 unaudited. Okay. I'm sorry, because I thought it was not showing me something there. All right, so let's see. So this is for the Q1 ending March 31st, 2024. So it says overview here. During the first quarter, the group remained focused on streamlining the operations of all its business units to achieve greater operational efficiency. So this is, I think, I'm not sure what all the business units for the company would be right now. Meaning, I'm not sure if well, let's read and see, and I'll share what my thoughts are because I'm not sure. It's been so long since I think I've gone through a review of this company. But it says here the group has made progress in developing its new business line, which is indoor digital advertising. We have partnered with some key locations and will continue to focus on building this segment. So there's an acquisition of Visual Vibe. So it seems to be a focus on advertising. So I'm not sure if that's the main business. So when it says all business units here, I was wondering if what that meant for the iCreate Institute. I'm not sure if that's still a thing. I'm honestly not sure, right? So there's major focus on addressing the issues that were cited by the RMOD, resulting in the company's suspension. Based on the feedback, we believe that we've complied with the requirements, and based on their feedback, we expect that trading in our stock will resume by the end of the second quarter. So that's what we're seeing, the resumption earlier today, I believe. So iCreate, a company, also successfully repaid Sagicor Investments bond. If you remember, they were placed in receivership sometime last year. So they're saying that they were able to repay that. That's certainly good to see. So the group achieved revenues of 32 million, representing an increase of 6.9 million over the comparative period for last year. The main driver of that is their digital out-of-home advertising business segment, which continues to show an average revenue increase of 10% each quarter when compared to the corresponding period. Okay. So the group recorded profit before tax of 0.3 million, so that'd be 300K for the first quarter, which is an improvement over $11.8 million loss over the same period last year. Their acquisition of Visual Vibe is showing immediate results for the group. Sorry, let me just go straight to Outlook. It's a little bit, I think, MD&A flow is a little bit strange for me. Okay. So it says the group remains focused on growth in revenue and cash flows from all member companies and simultaneously streamlining and strengthening their internal processes and investing in their team to realize their strategic objectives while strengthening the brands, right? Their other business divisions, iCreate Institute and Get Paid Group, experienced a slowdown for the period. Okay, so those are still considered their business units. I'd be interested to see a breakdown. I'm not sure if the report has it. A breakdown. iCreate Institute is undergoing a transformational plan which involves reviewing their academic programs due to fast-changing nature of technology. This too is the same for Get Paid. However, we have a new partnerships on the horizon which will enable us to quickly move towards achieving those objectives. Okay. All right, so let's see here. This is in the millions. So intangible assets of 36 million, property, plant, and equipment of 110 million. I'm assuming this is mainly Visual Vibe here. Goodwill of 500 million. It's there. Cash of 2 million. Accounts receivable of 48 million. And so total assets stand at 712 million. Okay. Share capital is the same. Accumulated deficit, of course, because the company, I don't believe, have registered. I believe they had a profitable quarter. I'm not sure. I think most of the other quarters were losses. So the accumulated deficit is quite significant here, 330 million. And let's see here, accounts payables, 99 million. And so, I mean, immediately here, I'm seeing that they would not have enough cash to pay their short-term liabilities here because current assets, accounts receivable is 48. If they get all of their accounts receivable, they wouldn't be able to cover their payables here. And they only have 2 million in cash. So that would be an immediate sign there. Taxation payable of 12 million and current portion of long-term debt, 29 million. I don't know if that's referring to the loan from VM, I'm not sure. Revenue, 32 million here. Admin and general expenses at 19 million. So, I mean, again, well, let's wait a bit here. All right. Finance costs actually decreased from 3.9 million to 1.5. And yeah, so I think that's it for revenues. Let's look at cash flows here. Hold on one sec. Let me see. Did I mention? Okay, so profit here is, oh yes, 0.3 million, so about 300K. And so that's what is coming here. Cash flow. So cash flow from operations, 26 million is being shown here. Payables, a factor there. Are other current assets. I have so many questions. Okay. All right, let's look at the trading here. Let me see. I did say I wanted to look at, so it opened just today. I wish I had, do I still have, I'm gonna check something. I'm gonna check to see if I still have my demo account for Moneyline. I probably shouldn't say this live. I'm just gonna check. I may not have it, but I'd love to see the trades for the day, which is why I'm checking to see, because the demo account would allow me to check that. I don't remember the password. Oh, let me use my account. Let me do that because I can just go straight to it. So 1 second, you're not seeing my screen yet because I'm just logging in. Stock market summary. I'm just hoping to see the trades for the day. Okay. All right, so we have that here. So it opened trading today, I believe, right? So total volume for the day was 800,000. And so I believe we saw that it triggered the circuit breakout. So that's what we're seeing here. It would have been triggered, I think around 11. I'm not sure if there were more transactions here. Usually it shows everything here. So certainly, I think some persons were anticipating that it might have halted down, but we see that it went opposite direction because I think opening price was 41 cents, closed at 49, right? So there's certainly growth on the day and as high as 52 cents, all right? So that's what the first day of trading looked like. I mean, just for this company, I'd say it's, I'd love to know what business they're in. I think that's what I'd say. So when I look at it mentioned the transformations for the institute and for get paid. I do remember, so there are a lot of blanks here, I'd say, right? And this is not, try to choose my words very carefully because this company has been through a lot of news and just theories and I'm not I don't want to speak to anything that's not factual, right? But I do remember that there were a lot of discussions around different ventures maybe over the last few years that I'm not necessarily seeing commenting on here. So I'd personally just love to know and fill in some gaps from maybe the last set of interviews that we did maybe a year and a half ago to where they are now. Because my guess is that most of the revenues that we're showing there was probably from Visual Vibe. So I'm not sure how much revenues are coming in from the institute and from Get Paid. I'm not sure. They don't have that breakdown, I believe. I scrolled through everything. I don't think I saw that. Yeah. So I'd love to just probably know what's happening there, just so that I can get a clear understanding of the company. So I'll probably look at the next few months, see how things progress for it. I mean, the fact that they were able to meet the requirements to no longer be suspended doesn't necessarily speak to the health or the future of the company. It just means that they were able to meet the requirements to start trading again, right? So I'd say if you're a shareholder, you certainly want to really look at where the company is headed. I think their AGM should be later on this year. Let me see if there's a notice of AGM here, because you'd certainly want to hear what's happening in terms of the other business lines, how they're going to solve their cash problem, because there is that, we see that from the balance sheet, they don't have enough cash to cover their current liabilities. And there seems to be some information that could help fill in some gaps there. So I'm trying to see an AGM notice, or at least to see when it was held last year, to have an idea as to when it may be held this year. I think I'm trying to see if they did an annual report. I don't believe I saw an annual report, because the annual report we usually have the notice of AGM. All right, so I'm not seeing that information here. So I did say we'd talk about Eddie Focal as well. Eddie Focal would have had Robert, I'm not sure, right? A lot of questions, as I said, surround iCreate right now. And I think a lot of things that were said, I would assume that because the rights issue conversation was 2 years ago. So I don't think they're doing that. It's not likely. So for Edifocal, there's been no update since June 4th. That was when trading had stopped. So it says here, suspended for not filing their audited financials for 2023, right? So that was Edifocal and Equity Line, and that was it. So there's no update since. So I'm assuming that once it's been posted, because I think there was a notice about the delay of the audited financials here on May 24th. That says they will try to do it by the end of May. So I believe because they missed this deadline, shortly after on June 4th, we saw the notice of suspension. So we're not sure at this point what's happening here. And Equity Line, as I said, I don't think that's a company we've spoken about. So Equity Line has 2 million units outstanding, and I have no idea what this company does, so I probably should look into it. We'll probably try and do some research here and find out about it at least. So maybe we'll include that in the next episode. So I'm not sure, Robert, I'd say I'd just wait and see. I'm not sure we're going to be doing any interviews with them or anything like that. I wouldn't be able to state that. But there's a lot of information I'd say that's still missing, a lot of blanks that would need to be filled out, or at least open loops from information would have had a couple of years ago to what we're seeing now. Because I know there was a real estate development that was discussed on our platform by the CEO. I know there was, I'm remembering your EGM and there are a lot of blanks that are there. So I'd wait to see again just how the next few quarters go. But at the very least, I'd love to see how things progress in terms of just their P&L for Q2. Because looking at the expenses that they had for Q1 and the expenses that they may have for Q2, they don't seem to have enough cash, right? So that's probably expecting to see either some debt, some loan, or something to maybe help them. I think they've shown that they have the ability to get financing as needed. And so I don't think that's a concern for them at all. All right. All right, let me check if there are any questions on Instagram. All right, not seeing any there. So I want to thank you guys so much. Let me know if you have any questions. Final call for questions. Limitless is asking, am I planning to review an executive from the company? When you say review, you mean interview an executive? Are you talking from iCreate? Let me know, Limitless, if that's what you're asking. Interview someone from iCreate? Oh, KW, I reached out to the CEO directly. I reached out to the chairman. I reached out to the CEO secretary. I reached out to another third party. I'm really hoping to have Mark Williams join us. I'm hopeful that we'll be able to interview him very soon. But certainly, if you're interested in the company, watch their AGM. Very interesting watch. I think it's an interesting company, one that I'm going to be looking at very closely because I think personally, I wish the dividend yield was a bit better, but they're investing in infrastructure right now. And so at the very least, revenues and profits should increase for this year, depending on when Ashenheim Road is rolled out, since it's already fully booked. So that alone gives it a very compelling story, I think, one that's worth looking at. The price is certainly attractive based on the PE. And so I think it's certainly one of the more solid companies we've looked at, right? Kebo, I think I answered you already. So PBS, I'm hoping to get an interview with Pedro. I did ask my contact for the opportunity to interview him as well. I've not heard back as yet. And guys, if you are watching this and you are either a CEO watching or somebody who has contacted a CEO, even if we've interviewed them before and it's been a while, I'd love for you to reach out to us, give us that contact. It's not easy to get interviews, I'll tell you that. It's usually a scheduling issue, right? CEOs are very busy, of course, and so I find that usually either we don't ask at the right time, or maybe it's just a matter of who we're speaking to. Where I do get the contacts for the CEOs directly, I'll reach out, share a little bit about what we do, and invite them to an interview. The interviews are completely free, right? So they're not having to pay to come on our platform to interview. So it's something that we invite all the CEOs to do. Certainly at least for the initial interview, so that we can hear from them, hear their vision for the company, understand their products and services, and so that we can not invest blindly, right? That's the main reason why we do the interview. So we need your help. If you have contacts, recommendations, suggestions, referrals that you can make, it will greatly help us. All right. So thanks guys for watching and joining me another week. Let me see if I have anything to mention here before we close out. Okay, yes. Join our community groups. So we're on Telegram, LinkedIn, Facebook. Join those groups. We talk about investing, money, real estate. We have an entrepreneur group in our Telegram group. You're welcome to join us. And the link is usually in our bio on any platform you're watching from. We do have our investment challenge as well. Do I have that slide here? No, I don't. Our investment challenge, we're halfway through. So we're going to be wrapping up that challenge in December 2024. Still time to join. It's $30 per month. And we have a monthly call. You get the opportunity to have a one-on-one with me if you need to. And we pretty much just help you to become better at investing, right? So we look at companies. We'll talk about how to create your investment thesis, how to do research, how to invest for income versus capital appreciation, just everything that would help you to become better as an investor. That is a part of our mandate here at Learn, Grow, Invest. And we wanted to make it affordable. So $30 a month, that's probably the price for a meal, depending on if you're feeding yourself or a family. And certainly we think that's worth it per month to join our investment challenge. You get access to all the meetings that you've missed. And once the challenge ends, we'll just kind of restart. It'll be like a graduation for those who are in it now. And then we'll try to come up with some more interesting things going into next year. But at the very least, you have access to all the content. You have access to a private group. And so we really try to help you become better as an investor. Limitless, I have no plans for what we're going to discuss next week as yet. I do know we have some interesting interviews that we're going to be launching soon. We did an interview with Lisa Lake, CEO of the L.E.A.R.N group. And so we're going to be releasing that soon. We're trying to get interviews, but as I said, they've been challenging to get. So we don't have many in the ways of new interviews to do, but you're going to be seeing more reviews like we did tonight. And we're going to see the uncommon names and the uncommon companies, because as I said, I think this is the season for looking at those companies that maybe you don't normally hear about, maybe performing well, maybe have a compelling story that it's worth looking into. At the very least, maybe moving away from, I know we mainly cover junior market companies in the past. We want to cover more of the market. So maybe looking at more of the main market going forward, just because I think it's worth looking at some of the companies that maybe our average viewer may not be aware of. All right. So I don't know what I'm discussing next week yet. If you have any recommendations, feel free to let me know. All right. So thanks, guys. I'll see you next week. Please do enjoy the rest of your day.